Bitcoin enters this week in a notably different state than much of June, hitting a 1-month low. After repeatedly testing 70K resistance, Bitcoin's price has dipped to around 65,000, dropping nearly 5%, taking the rest of the market down with it. There are many scenarios that can be behind this downturn, which can lead to most to not bother and wonder the whys, or more importantly, what's next? In this video, we're going to break it down simply and analyze an article by Cointelegraph written by William Suberg to discuss the top 5 critical factors to look at in Bitcoin this week. Let's dive in. So there's no questioning that Bitcoin and really the entire crypto market has experienced a tough week, ending with nearly being down 5%, bringing BTC to $65,000. Despite hitting a 1-month low, bulls managed to slightly recover, but the $69,000 resistance level remains unbroken. In quote, Bitcoin remains red on 3-day Predator with still no significant signs of a trend shift just yet, said Decent Trader, who shared on X. Data highlights 66 to 65,000 as a critical level for order book liquidity, with 67,300 acting as resistance. The market continues to remain in a narrow trading range, and sideways price action is considered preferable by some traders over impatient-driven moves, which is what we have been seeing over the last 48 hours. In quote, sideways price action is generally speaking not a bad thing. A lack of patience is. Joe further described the weekend's Bitcoin movement as typical, noting a bullish divergence and the price tried to hold above 66,300. He urged bulls to push the price back into the range, which we have since broken down through, testing 65,300. Commentator Matthew Hillen found optimism, pointing out that Bitcoin's 10-week simple moving average remained intact despite recent dips. This indicates some resilience in the current market sentiment. Outside of technical analysis, Jobless claims highlight calm macro weeks ahead. Following a flood of macroeconomic data in June, this week promises a respite for risk asset traders, with US jobless claims being the only major economic trigger at the moment. Given the crypto sector's historic sensitivity to unemployment surprises in 2024, these claims could impact volatility. The Juneteenth holiday on June 19th offers a market break, with jobless claims released the following day. And of course, what would a top 5 be without the Fed? The Kobesi letter noted the continued influence of data prints on market expectations for significantly loosening in US financial policy. Trading on massive swings in Federal Reserve expectations have been profitable this year. CME Group's FedWatch tool suggests that the earliest likely date for interest rate cuts is the Fed's September meeting, with only a 10% chance of it happening in July. Financial commentator TED Talk Macros indicated that last week's data points to a shift towards more accommodating monetary policy. He stressed the importance of Bitcoin maintaining its support at 66,000, which we have since broken, to avoid strong market sell-offs and liquidations. Furthermore, Bitcoin miners face new economic challenges, with mining difficulty expected to drop by around 1.3% at the next automated readjustment on June 20th. This highlights the ongoing capitulation phase as miners adjust to post-halvening conditions. Despite these changes, sustained demand for Bitcoin suggests a resilient market foundation. And lastly, looking at some basic data for a long-term outlook, Bitcoin whale behavior has been notable, with large volume traders accumulating BTC despite short-term price narratives. Smaller wallets are also increasing, with those holding 10 Bitcoin or more reaching 16 million, reflecting 82% of the BTC supply. This data is significant and really goes to show that You have all this trading going on day by day, but the majority are accumulating on the sidelines. Furthermore, Santiment's data shows a strengthening correlation between 10 plus Bitcoin wallet holdings and Bitcoin's market value since the fall of FTX. This trend indicates strong confidence among larger holders, and also a reversal from that negative sentiment from that time period in the industry. Whales continue to play a crucial role in the overall holding trend for 2024. Coins acquired before the launch of the US spot Bitcoin ETFs in January have largely remained dormant. This behavior has turned short-term holders into long-term holders quite easily, showing a high support indicator for Bitcoin. Bitcoin short-term holder entities which hold BTC for up to 155 days represent a critical support trend line during the current bull market. In summary, it's quite clear that the crypto market is still heavily influenced by US macroeconomic data and Federal Reserve comments, leading to cautious trading. As employment figures are awaited, Bitcoin miners are adjusting to post-halving conditions, with network fundamentals cooling and mining difficulty expected to decrease by 1.3%, which really just means the market is in a wait-and-see mode until significant shifts occur. But I want to know what your current thesis is on the market, and how are you handling these rocky conditions? Are you waiting on the sidelines to see what comes, or are you taking these downfalls as opportunities to increase your holdings? Thank you guys as always for watching, and I'll catch you in the next.